Hello, everyone. Welcome to another episode of the Market Minute in the Shady Corner. I'm David Schneider with Revel Property Group of VXP, and today we're going to discuss the national real estate trends, both in residential real estate and the mortgage markets. So, what do we know? Well, nationally, home prices are actually surging. The Black Knight Home Price Index reported an all-time high in June, with a majority of our major markets observing monthly growth. In fact, nearly 30 out of the top 50 largest metropolitan areas are witnessing new home pricing peaks. It's big. So what we're looking at is, while the prices climb, many potential home buyers are apprehensive, with good reason. Fannie Mae's July Home Purchase Sentiment Index indicated a hesitancy to buy. However, if you want to look at the bright side, nearly 2/3 believe now is an ideal time to sell. Again, remember, this is national, it's not local. So, is there a silver lining for our home seekers? Well, home builders may be that silver lining. What they're witnessing is a positive trend as the supply of new building lots reached a 3-year high in the second quarter. An optimistic sign, as this will likely augment our home inventory, which locally we know is extremely important. Now, on the financial front, the stock market has actually witnessed an impressive rally. The S&P 500 surged nearly 18% from March to the end of July. Great. But like the calming waves after a storm, it seems like traders are now taking a break. The Dow saw an increase recently, while the S&P 500 and the NASDAQ made a slight retreat, which again, it's okay. If we look at what's happening globally, the global economic indicators actually present a mixed bag. While there are still concerns that loom due to a pretty weak U.S. trade number and some disappointing figures coming from China, the July Consumer Price Index actually met estimates, which is very important. Plus, the unemployment scene looks very promising. It's staying well below recession benchmarks, which is what we like to see for a stable market. Now, if we shift focus to mortgages, the average 30-year fixed mortgage rate has actually seen a slight uptick recently. It's essential to note that these rates can be unpredictable, so always consult with a mortgage expert for real-time insights. All right, let's talk a little bit about new construction. Here's a quick tidbit for you. The shortage of available homes is bolstering new home demand, meaning new construction demand, and new home builders have now cornered more than 30% of the market, and that's up from their historical 10% to 15% of the market that we typically see. Right now, mortgage rates are important and all eyes are on the Federal Reserve. And while many anticipate rates to remain steady throughout the year, there are some analysts that are hinting possible change by December. The current rate actually hovers between 5.25 and 5.5%, which, when you look at history, that's pretty reasonable. The question is, how will the next Federal Reserve meetings pan out? Well, probabilities indicate stability for the September 20th meeting and probably the November 1st meeting. However, we are looking at December 13th, where we may see the next hike, which could be 1/4 to 1/2 of a percentage point. So in conclusion, while the market is constantly evolving, the important thing is that you're informed. Being informed is your best asset. So whether you're buying, selling, or just curious, know that I'm here to guide you every step of the way. This is David Schneider with Revel Property Group of VXP. And whether you're buying in 10 days or 10 months, give me a call. My number, 512-638-6585. Have an amazing day.